Wealthy investors think differently about money. For them, money is a tool, a worker that never rests. Their top priority is capital preservation, protecting what they have. Losses hurt more than gains feel good, so every decision is made with caution. They're not gamblers. They're strategic, long-term thinkers. Diversification is their shield. They spread investments across stocks, bonds, real estate, and even art or rare wine. They're building a financial fortress, not just a pile of cash. Patience is their superpower. They hold through market ups and downs, tuning out daily noise. Downturns are seen as opportunities to buy valuable assets at a discount. They rely on a team of experts, advisors, lawyers, accountants, to guide decisions. Decisions are based on data and research, not emotion. This mindset is the foundation of their success. Technology is now the backbone of the global economy. Wealthy investors aren't just buying tech stocks, they're investing in the seismic shifts technology brings. Artificial intelligence is transforming industries, making businesses more efficient and unlocking new opportunities. Investors, like Masayoshi Son and Bill Gates, are betting big on AI and biotech, knowing breakthroughs can change the world and deliver huge returns. Healthcare tech is booming as people live longer and demand better care. Wealthy investors fund companies developing new drugs, medical devices, and personalized treatments. Digital infrastructure, 5G, data centers, cybersecurity, is another focus. These investments may not be flashy, but they're essential, providing steady income as our lives move online. Some take high-risk bets on quantum computing and space exploration, aiming for transformative payoffs in the future. People like Jeff Bezos and Elon Musk are building the foundations for new economies in space. Quantum computing could solve problems today's computers can't touch. These frontier bets are small parts of their portfolios, but they're wagers on the future. The wealthy see technology as a long-term transformation, not a passing trend. They want to own a piece of the future, wherever it leads. By investing early, they help shape the world's next big leaps. Technology is their engine for growth and innovation. In 2025, it's a core pillar of every wealthy investor's strategy. The green economy is the investment opportunity of our generation. Wealthy investors see profits, not just politics, in the shift away from fossil fuels. Trillions will be spent on renewables, solar, wind, geothermal, creating stable, long-term returns. These assets often come with government contracts, providing predictable cash flow. Energy storage is a huge focus, as better batteries are needed to make renewables reliable. Investors are backing companies developing next-gen storage solutions. Electric vehicle infrastructure is another hot area. Charging stations, grid software, and mineral supply chains all attract capital. The wealthy also invest in sustainable agriculture, water technology, and the circular economy. Water scarcity and waste reduction are big problems, and solutions create value. Businesses that turn waste into resources are especially attractive. Consumer demand, government regulation, and corporate pressure are all driving this shift. Wealthy investors aren't just following the trend, they're accelerating it. By funding green companies, they help scale solutions faster. Leaders like Larry Fink of BlackRock see climate risk as investment risk. This mindset is now mainstream, guiding trillions in capital. Sustainability is no longer optional. It's a core part of every major portfolio. The wealthy are betting big on a cleaner, more profitable future. In 2025, green investing is a must-have, not a niche. The best opportunities for the wealthy often lie outside the public markets. Private markets let them invest in companies before they go public. Think Uber or Airbnb in their early days. Venture capital funds target high-growth startups, accepting high risk for the chance at massive returns. Most startups fail, but a few winners can transform a portfolio. Wealthy investors spread risk by investing in funds holding dozens of startups. Private equity is different. It buys mature companies, improves them, and sells for profit. This hands-on approach can deliver strong, uncorrelated returns. Private markets offer diversification and access to unique deals. These investments are illiquid and require large minimums, keeping most small investors out. For the wealthy, illiquidity is a feature. It allows for a long-term view without daily market noise. In 2025, as public markets face volatility, private markets remain a major draw. The wealthy use them to access innovation and steady growth. Private investments are a key part of their strategy. They're willing to lock up capital for years to capture outsized gains. Private markets are where the next big fortunes are made. Wealthy investors are looking beyond stocks and bonds to alternative assets. This includes everything from fine art and collectibles to private credit and infrastructure. The goal: diversification and returns that don't move with the stock market. Private credit, lending directly to businesses, offers high yields and steady income, acting like a bank. Tangible passion assets like art, classic cars, and rare wine are more than hobbies. They're stores of value disconnected from financial markets. Scarcity and desirability drive their worth, making them a serious wealth preservation tool. Infrastructure, airports, pipelines, data centers provide stable, inflation-protected cash flows. These assets are often backed by long-term contracts, adding predictability. Pension and sovereign wealth funds have long invested here. Now more wealthy individuals are joining in. Alternatives act as a hedge against uncertainty and inflation. They add stability and unique growth to a portfolio. For the wealthy, alternatives are no longer optional, they're essential. In 2025, they're a core part of the playbook. Despite new trends, traditional assets remain the foundation of wealth. Stocks, bonds, and real estate are the bedrock of every serious portfolio. The focus is on quality, dominant companies with strong balance sheets and reliable earnings. Think Microsoft, Coca-Cola, or Johnson & Johnson, businesses that thrive in any economy. Bonds provide income and stability, acting as a shock absorber during market turmoil. The wealthy value bonds for their defensive qualities, not just returns. Real estate is another cornerstone: commercial properties, apartments, and luxury homes in prime locations. Industrial real estate and data centers are especially hot as the world changes. The strategy: buy the best, hold long-term, and use downturns to add at better prices. The wealthy aren't day traders, they're patient, disciplined investors. Traditional assets provide the stability needed to layer on more adventurous bets. The combination of old and new creates a resilient portfolio. In 2025, classics still matter. They're the anchor in a sea of change. For the wealthy, risk management is everything. Diversification is their first line of defense, spreading investments across assets, geographies, and strategies. Liquidity matters too. They keep cash on hand for emergencies and opportunities. This dry powder lets them buy when others panic. Hedging is another tool, using options or safe haven assets like gold to offset losses. They accept lower returns in good times for protection in bad times. Simplicity is key. They only invest in what they understand or hire experts who do. They monitor global risks and adjust strategies as needed. In 2025, inflation, geopolitical conflict, and economic slowdown are top concerns. By anticipating risks, they keep wealth intact for generations. Managing risk is the secret to staying rich. The investment moves of the wealthy ripple through the entire economy. When they fund green energy or tech startups, they create jobs, drive innovation, and shape the world's future. Their capital accelerates new industries, from clean energy to biotech, but their buying power can also drive up prices, like housing, making it harder for regular people to compete. Their choices can change neighborhoods and impact affordability. Watching where the wealthy invest reveals future trends and job opportunities. If capital flows into biotech or sustainable agriculture, those fields will grow. Understanding their strategies helps you spot where the economy is heading. The rich don't just grow their own wealth, they influence everyone's financial future. Pay attention to their moves. They're building tomorrow's world. The Wealthy's 2025 playbook blends discipline, diversification, and a focus on capital preservation. Their core high-quality stocks, bonds, and prime real estate for stability. On top, they layer growth bets in technology, sustainability, and private markets. Alternatives like private credit, infrastructure, and collectibles add resilience. They invest for the long term, guided by data and expert advice. Their approach is strategic, not speculative. This mix of old and new is designed to weather any storm. The goal: steady growth, inflation protection, and risk management. This is how the wealthy stay wealthy and grow even more. In 2025 and beyond, their strategy is a blueprint for lasting success.